actually is a profound change, use of technology in banking, because talk about trade. Trade remains to be very, very paper-based, very manual, prone to errors, prone to fraud. So the use of digital trade, hopefully, directionally, will improve efficiency, improve quality, customer service, and actually reduce the cost.
Here in Hong Kong, we sit as we try to become a digital asset hub, a crypto hub. How does Hong Kong fare in terms of fintech against some of its neighbors like Singapore or other players in the region?
I think both markets doing its huge amount of push towards digitalization, tokenization. Both have done a very, very good job. But I think Asia is so big because the tapestry of Asia is very, very, I would say, diverse. So you do need different hubs to facilitate different flows. Hong Kong supports more the Greater China, North Asia. Singapore supports more the ASEAN network. Both have done a phenomenal job.
What about talent? In terms of nurturing, is there local talent here, or do you think that it needs to be attracted from overseas?
Over time, talents are attracted to where opportunities are, and both are very, very meaningful hubs where we're seeing growing number of people from around the world to be attracted to work here and hopefully develop some innovative technology here.
We've seen a lot of competition in the fintech space up in China, and of course, we continue to track the sluggish economy on the mainland. The market has been bracing for the stimulus measures, trying to put a monetary figure on it. We're going to be hearing from the National People's Congress Standing Committee. A date has been set, November 4th to the 8th. In terms of fiscal budget clarity, what are you expecting and what do you make of what we've heard so far?
Yeah, obviously, we have seen a very significant change of policy direction by China, both monetary policy and beyond that. I think this is a very significant change. Obviously, the whole, I would say, market has been expecting is $1 trillion, $2 trillion, $3 trillion. I would say we shouldn't micro-scrutinize and micro-analyze to that degree. We should look at that. China is a 30-year huge amount of growth in the last 3 decades. They're trying to shift from a quantity-led growth to a quality-led growth. That change is a very, very profound transition. On top of that, they have to digest a lot of, I would say, over-leveraged problems in the CRE sector, et cetera, et cetera. So I do think the market should look at this transition in a more material and macro way rather than super analyzing, is it what quantum, what measure, is it 4.7, 4.8, 4.9? I think they're missing the point here.